And without further ado, we're going to get going with our first presenter. Tanis Sirski is an advisor in M&P's Farm Management Consulting Group with the primary focus of providing consulting services emphasizing profitability, operational efficiencies, and risk management. With 20 years experience as an agronomist, we went to school together, so that hurts to hear and say out loud. With 20 years experience as an agronomist and a background in agricultural economics, she brings practical insight from working with grain, cattle, and dairy farmers, as well as seed and crop input retailers across Manitoba. Tanis is a professional virologist and certified crop advisor and has completed both a Bachelor of Science in Agribusiness and a Master of Science in Agricultural Economics. As I said, we went to university together and I always knew she'd be a leader in the industry. She's got really star quality, so really excited to have her here, and it's really exciting to see people I used to cheat death with on weekends turn into such wonderful leaders in this industry. So without further ado, please join me in welcoming Tanis.
Thank you. Is this working? Thanks, Melissa. This is my first time speaking at Ag Days, and I'm a little nervous, so it's nice to have a little family introduction from Melissa. We go ways back. And just a fun fact, too. I just flew in from Peru. I was in Peru for 2 weeks with my mom and my uncle. Just kind of an unexpected, well, not really an unexpected trip. My dad was supposed to go, he wasn't able to, so I got the pleasure of going to Peru. So I flew in yesterday at 4:30 in the afternoon, go straight here to Brandon. I haven't been home to see my kids, so after I'm done this, I'll be heading back to Grandview to go spend some time with my kids. So just a heads up, this presentation won't change your life. We're going to go through a few things here today, just about building resiliency. There's a lot of unpredictability and uncertainty in the world here right now, but I'm not going to be able to change any of that kind of stuff for you guys. So we'll go through a framework that we've worked with other producers in my experience here with M&P, and we'll just chat about a few things in building resiliency and what that looks like on your farm. And some of these slides are more grain focused, so they kind of threw me in here this wonderful beef session with you guys, but I'll tailor make it to to make it relevant to you guys as well. Yeah, so my name is Tanis Sirski, like Melissa said. It's a pleasure here speaking with you guys here today. Thanks for coming, and thanks for the organizers of Ag Days for creating such an excellent event year over year. I'm assuming it's excellent. Like I said, I just flew in here yesterday afternoon, so I haven't been cruising the show very much. So these are just some couple of pictures of my trip. I did take my computer with me, and I was hammering out my presentation when I was sitting in some coffee shops in Peru. So Monday I was at Machu Picchu, a wonder of the world, and today I'm at Ag Days, a Western Canadian wonder of the world. This is no lip. There is no lip here. So here's what I'm going to talk to you guys about here today. I'm going to forget my notes because it's going to make me nervous anyways. Okay, so we're going to go through a few things here today. Maybe there's one thing that we can agree upon, that the world is changing. We're going to talk about some trends in the industry that we're seeing, talk about operations versus business, and maybe some focuses that we can kind of align along. Building a plan and with what we know, ratios to understand and use, and I came up with this wonderful little acronym, patent pending, so it's going to be very exciting. So 2025 in review, I feel like I'm standing right in the middle here. 2025 in review, there's a lot of uncertainty in the world, right? Like there's Trump, we got the 3 T's, Trump's tariff, trade, a lot of things going on. We don't know what's going on with Trump. We don't know what's going on with our international relationships. Like there's a lot of uncertainty there. Russia versus Ukraine, wars, trials and tribulations with other countries. China is always up in the air. AI, how that's changing the way we do business and the way we communicate with each other. There's a lot of uncertainty. Market volatility, but maybe the grain prices are stabilizing. That's just a kind of a highlight of what we saw in 25. And in the first 3 weeks of 2026, what have we seen? We've seen Trump still continue to do his thing, trades and tariffs all up in the air. Carney went to China and had some success there. Alberta wants to leave. Venezuela is now under the US. CFIA changes. And we could talk about Greenland too. Trump wants Greenland. There's some updates there too. So I think there's one thing that we can agree on, that there will always be something in this industry. It's the wonderful thing of working in agriculture. It brings upon opportunities, it's challenging, but there will always be something. So when we're thinking about our farm and our farm business, how can we create some resiliency when all these things are changing all around us? And this uncertainty is never going to go away. So why is this important? It's because we're starting to see farm income go down. And this isn't new, it shouldn't be news to you guys. And maybe more on the grain or on the cattle side, sorry, you guys are seeing obviously some really great positivity in the markets and maybe making some money where you haven't in the past. But on the grain side, we're starting to see the opposite. So our average net earnings, per acre are starting to go down. And we're expecting them to go down even further into 2026. So having resiliency, having a plan is going to be even more important. This is a slide I stole from a coworker in Regina office. So this is just a range of net earnings from last year. We do some work as post-season, post-harvest snapshots. We collect some information from our clients, and he made this chart. So this is here. I don't have a pointer, but on this side, we're seeing the high range of net earnings. On the other side, we're seeing the low end of net earnings. And this is 141. Oh, sorry, what was 141? So 183 of our farm clients. This is their range of net earnings. So you can see the spread, the difference. There's guys that are making some good money, and there's guys that are losing a lot of money. 141 made money, 42 of these guys lost money. So we can see, that spread is there. There's going to be guys that are going to be making some decent coin, and there's going to be guys that are going to be losing coin. When we look, again, this is more relevant to our grain farmers we look at, but I can expect some of our cattle farmers, we're going to see that same spread when we're looking at that last chart there too. There's going to be guys that are going to be making money selling calves, and there's going to be guys losing money. When we look at more detail when it comes to our gross margin, production expenses, and whatnot, we will look at a benchmark and some averages here too. So this is from 2024 info compared to the 5-year average. A pointer. So on the gross revenue side, we are seeing it go down compared to our 5-year average. That shouldn't be a surprise. We're seeing gross margin go down. Production expenses are tending to stay about flat. We're also seeing earnings from operations take a really big hit. So that's from 2024, and we're expecting it to go down in 2025. When we're looking at compared to our benchmark info, so when we're looking at all of our data, we're looking at the guys that are making the most on the contribution margin over 5 years, and that creates our benchmark. So it's giving our farm clients a really good idea of where they're falling compared to their peers. When we're looking at our benchmark numbers, the gross revenue, it's higher. Our benchmark producers are making some money, so they're figuring it out. They're figuring out ways to generate some income compared to the average. Same thing with gross margin. So we're taking all your revenue minus your chemical, seed, crop insurance, and fertilizer. That's what's included in the gross margin numbers. And those guys are making some money there too. When we look at the labor, power, and machinery side, we're finding that indicator to be about flat, or the same, I should say. So 2024, our average labor, power, and machinery is $209, where the benchmark was that too. So what I'm just trying to say is we have a group of farmers that are doing well, that they've set our benchmark, they're consistently higher than the average, and they are able to make some money in some uncertainty. We also look at our debt service ratio here too. We're finding that guys are taking on more debt and maybe having some trouble paying that debt with what they're earning on their farm. And we're predicting that to stay about the same, if not go down a little lower. So that's another concern as well too. If you're overextending yourself on your debt side, and if you're not generating enough income, you might have some trouble paying some debt. So like I said, so what? This is not new news. I'm just saying this stuff to kind of set the stage as to why building a plan and having some resiliency is important in your farm business. Okay, so that's kind of the the bad news side story. I'm hoping with your cattle prices that things are a little bit better than the grain side. But now we're going to get into more of the meats and the potatoes of the presentation here. So let's talk a little bit about operations versus business. So what do we like to talk about as farmers? It's just going to be an animated slide here. You know, there's all these wonderful things I think we all like to talk about. You know, iron, yields, politicians, the weather, what your neighbors are doing, the bugs, the weeds, the insects, you know, markets, land prices. All those things are pretty black and white. You know, we can kind of get into talking about them and not really getting into the meat and potatoes or the weeds. Some of the harder things to talk about, though, what are they? Maybe finances, aging, some of your obligations, those expectations that are on you as farmers, your needs versus wants, cash flow, debt, who to trust. And I put these in different colors on purpose. The things that are easy to talk about, they're kind of black and white. You know, we're just going through the motions, we're just talking about them. But those harder things to talk about, they are more gray. And they're colorful too. That's what brings everything kind of to life. What makes us all different. So we can't be afraid to talk about the harder things. And if you don't talk about them amongst yourselves or amongst your family, amongst your peers, are you talking about them? And I challenge you to start talking about them. Because if we can't talk about why the ship is sinking, it doesn't matter who's steering the boat. Okay, so these are important things. So my talk is supposed to be on resilience. So then I had to Google, what does resilience mean? You know, let's do a refresher on what this word means. Resilience, an ability to recover or adjust easily to misfortune or change. I can probably say that all of you guys have faced adversity, you're all facing change, you all have a lot of resilience. I like this one here too. Resilience, it means to nurture a positive point of view of yourself, to make connections, to accept that change is a part of life, to take decisive action, to move towards your goal. And sometimes we're just doing the best we can with the information that we have. But that really builds resilience. So I started this presentation originally thinking about that I was going to come up here and talk about a fortress and for you guys to build a fortress with information that you know. And then, we don't want to get too much into politics, but I ended up reading Mark Carney's speech this morning. And part of it was talking about building a fortress maybe is not a good thing, because then it can build something around you and that leaves you powerless and not without outside influence. So I took that out. I don't think building a fortress is what we need to do. I think we need to build a plan around what we know. And I think the things that we need to know as farmers when we're facing all these risks and facing all these adversities is to know your numbers, know your strengths, know your weaknesses, know your debt, and know your working capital. And I'm sure there's a lot of other things that we need to know too, but this is the framework of which I'm presenting here today. I'm also going to just touch briefly on, we also have to know our risks. Like, what are those things that are going to be penetrating into that circle of what you know? So you need to know your net risks. You need to know which ones are going to be probably maybe the more frequent ones, which ones are going to have the most impact onto your farm. You need to know who has your back, who you can trust. And I threw this in there, and it's totally a joke, but maybe you can have a small child with you. Because when I was in Peru, all these small children, they took all of my money. I was just giving my money away. Because they really sick all the small children and the old ladies to sell everything there. So maybe if you need some negotiating power, take a small child with you as well too. Okay, so we'll just start with know your numbers. And I think this is the thing where M&P does a really great job in helping our farm clients out here. So knowing your numbers, have a budget, know your per acre or your per head numbers, comparison to historical. So keep track of your numbers, making sure you're on track to what you expect out of your farm business, And if something is not going according to that plan, then why is that so? If any of you guys do farm financial statements, that's where we need to start here too. Do a compilation report, have a balance sheet, know your cash flow, know your incomes and expenses. And let's compare to peers or have that target too. So make sure you're talking with one another. If you're part of a peer group, is also very helpful. But communicate. There's a lot of producer organizations, ways for you guys to get together and compare your numbers and be open about it. And it's a really good thing to practice this every quarter, every three or four times a year. That way you guys can keep track. And then we want you to know your numbers even more. You can see this. So we've been talking about those trends, just digging beyond the chem, seed, and FERT or the feed costs. Really look at your labor, power, machinery costs, your debt, your interest payments, everything that kind of goes into your bottom line. Think about 2 ways to generate more income with keeping your costs the same. That's a challenge that we pose to a lot of our clients here too. Is there capital improvements that you need? Do you want to reduce your debt? How do you best deploy some of that extra cash that you have to make it the most useful on your farm? And think about the data that you need. If you don't have the right data, then what is that piece of information that you need? Think about that too. So we do a lot of benchmark, especially with our grain guys. We are working towards having a better benchmark for our cattle guys or our mixed farming operations as well too, but there's some intricacies with that are complicated, but just starting to have that benchmark. If you were talking with your peers, like kind of know what their costs are when it comes to having cows or when it comes to growing that bushel of grain. You can have some key productive or key indicators that kind of help along the way there with that too. So I'll talk a little bit about some ratios as we get going as well. So that's going to be part of the numbers. But using your financial statements as a roadmap, and then having that benchmark kind of as a compass. So here's kind of an example of one of the benchmarks that we do, and this kind of helps our grain guys out quite a bit because it gives them an idea as to the range as how they are performing on a per acre basis. So we'll give them our producer benchmark, their average, and then the plus or minus as to where they fit in. So we do this for into more detail as well too. I just shared the FERT chem and seed one here too. So with this particular farmer, we can see that he saved a bit on fertilizer, but then he overspent compared to the benchmark on his seed. Again, just knowing your numbers, having a starting point. Okay, the next one is to know your strengths. We all have strengths and weaknesses as individuals and as farmers, but when we come up with a plan, you have to know what your strengths are. Why is your business so successful? There's a reason that you got here to this point. Is it because you grow really great crops? You have great herd health? What are those strengths that are leading for you to be where you are right now? You have above average marketing abilities. Are you timing the markets right? Can you sell at the right time? Are you pinched for cash and you have to sell when you have to sell, or do you have a bit more time? You have low operating costs. Are you able to take advantage of that? Maybe you've saved all your money and not overspending on iron. There's advantages to that too. You have a low debt. Are you a third generation farmer that maybe is coming in with a little less debt than a guy that's just starting out? That's an advantage. And do you have strong working capital? Are you able to cash flow your operations and not having to maybe worry as much about selling that grain to pay the next bill? But the same side, we also have to know our weaknesses. I think this is the tough ones too that maybe we don't always talk about as well. What are your weaknesses as a farmer? Is it bookwork? Is it not knowing your numbers? Is getting bogged down by paperwork? Maybe your agronomy? Maybe you don't have enough time in the day. Are you overworking? Labor? You need some help on the farm? Maybe you have too much machinery and you're have some big payments, you got to know your weaknesses too. And then if you're not willing to either ask for help or get someone to do it for you, then that could be an area that guys can get caught up in. You got to know your weaknesses. Then you have to know your debt. Most of you guys didn't get here without any debt. It's kind of just a part of farming. You have to have a good relationship with your banker, making sure that they're not having any surprises as well too. Those ones aren't fun. We want to make sure we're matching the debt with the asset life. So don't take a 25-year loan on a piece of equipment that you're only going to have for 5 years. And the same thing too, don't take a 5-year loan on a piece of land that you know is going to take you 25 years to really reap any rewards from. Make sure you're timing your debt payments with the asset life. When is debt a good thing and when is it a bad thing? Those are kind of some tough, well, they're not tough, but they're kind of a little bit more complicated in answering. So you kind of have to do some digging to figure out which debt is good and which debt is bad. But those are questions that you kind of have to ask yourself too. And making sure you're keeping the operating line for your operating expenses. If you're using your operating line to make a big purchase, that can lead into some concern. So just understanding your debt, making sure that you have a good relationship with your banker, and knowing when it's a good thing. 5 minutes left? Okay. And your working capital. Okay, what are your worst case scenarios? And when I talk about working capital, I'm going to just blue through here. This is the big thing here that's going to help us build some resiliency. So your working capital are the funds that you have available to meet your everyday operational needs. And when we're talking about this working capital, it's your current assets minus your current liabilities. So your current assets include all your inventory, your cash, your accounts receivable, and your prepaid expenses. And you're going to subtract your short-term debt, your cash advance, credit lines, and your accounts payable, any current portion of long-term debt. But what we really want to see is this working capital be about 50% of your total expenses for the year. That means you have enough reserve to get you through the next year if you don't have a crop or if you don't sell any calves. So this is your fallback. Gives you that safety net. So do you have enough to farm another year? It's kind of the question that I ask everybody. I'm just going to breeze through here because we don't have enough time. I talk too much. Okay, so your working capital. So this is just an example here. So if you have your current assets with everything that you kind of have with your cash, your inventory, your accounts receivable, at say $775,000, and your current liabilities is what you owe for your accounts payable, your current portion of long-term debt, and you have a current working capital of $250,000, but then you have $750,000 of operating expenses for the next 12 months of farming. That leaves you with a ratio of 33%. So you only have 33% of that working capital to cover those expenses. And we want that ratio to be about 50%. Okay, so yeah, what does this mean? So it's understanding that this 50% of this working capital is an important number to kind of keep track of. So you're going to get that off of your balance sheet, your current assets minus your current liabilities. And we said we want that to be 50%. We also want your debt service ratio to be greater than 1.5. I'm sorry, I'm really breezing through here. And your debt to equity, that's another ratio that we're going to look at, is between 35 and 50%. So your ability to service your debt. But all this doesn't come up with just by wondering. So this is my uncle, passed away a couple of years ago. You guys might know Andy. He wrote for Grain News there quite a bit. So wondering doesn't get you anywhere. We've got it. This is my patent pending plan. And the L isn't an I know, but like I said, I did surprise you. So we want to make sure we plan. So it's the pain in the butt, non-negotiable. But it doesn't have to be cumbersome. It doesn't have to be like anything difficult or hard. We can make planning fun again. So your plan doesn't have to be complex, doesn't have to be detailed. It doesn't have to cover all your basics. It just needs to be communicated. It needs to be clear, and it needs to include accountability and just achievable. So we want to make sure that you're creating that plan around what you know. So know your numbers, know your strengths, know your weaknesses, know your working capital, and know your debt. And really come up with that plan around those things that you know. So that's going to protect you against that resiliency, or protect you against that uncertainty, and really start to build some resiliency on your farm. So again, and know your risks as well too. This is just a picture. Being in Peru really showed me, there's some amazing folks that created all these wonderful things in Peru. The Incas is just an incredible culture. These folks build all these buildings, and that stone, that's my uncle right there, that stone is I think 200 tons, and it was built just incredible. These folks had a tremendous amount of resiliency to build what they did, but it takes time. This structure here in Peru, it took 75 years of 24 hours a day labor. So these things take time. So don't worry if things aren't always going according to plan. These things take time. So hopefully I went through everything that I said I was going to go through, that times are changing fast, that there's some trends in the industry that are happening right now that are leading to some worry sometimes, maybe with some of our farm operations here with low net earnings. We talked about operations versus business. Who was working on your business when you were working on the farm? We talked about building a plan around your numbers, around your strengths and weaknesses, around your debt, around your working capital. I breezed through the ratios. I'm really sorry. I talked too much. And then we went through our patent pending plan there. So hopefully I achieved that information. I hope you learned something here, and I hope you guys go and create a plan that works for you and your farm, built around my presentation. Thank you. Any questions?